Well, howdy there, folks, and welcome into today's video. Today is the Jeremy Lefebvre portfolio update. I haven't done one of these for quite a while for you guys, and so today I'm going to take you guys through the entire public account, position by position, and I'm going to kind of give my opinion on these stocks. I'm going to show you the cost basis on these, like how much we're up or down, anything like that. And I think today's a little down day for us today, and mainly because our biggest position in this account is Tesla Tesla, and Tesla Tesla is down a bit today. So yeah, I want to show you guys this. We haven't gone through this in a long time. This account is my second biggest stock market portfolio in total. This one we started a little over 3 years ago in the private stock group. And I wanted everybody in the private stock group to kind of see how I built a portfolio over time. And we've done a pretty good job of it, let's just say that. Now it's a seven-figure portfolio. So I'm pretty thrilled with, the progress that's happened there. Every single move ever in the history of the account has been documented. And so it's been fun to see it build and build and build and go through, a position that didn't work out and positions that have obviously done, insanely well and things like that. So I hope you guys enjoy this. As always, all I ask is that you smash. As always, guys, that's all I ask. I do appreciate it. That helps us out huge in the YouTube algorithm and all those sorts of things. All right. If you want to join us in Stock Hub, that'll be the pinned comment down there. Stock Hub is a free Discord chat we have, and a lot of people love it. I think we're about 65,000 members in there now. Folks love it. And then the second pinned comment down there will be if you're looking to join my private stock group and you're looking to join the private Discord chat and you want to apply for that, that'll be the second pinned comment down there. So let's get into this, guys. Hope you enjoy this as always. And let me know what you think about these stocks, all right? So first stock up here is Beyond Meat, ticker symbol BYND, okay? And let me take a drink before I talk about this one, all right? So if you told me I had to sell one stock in this portfolio, it would be Beyond Meat. Not because I don't believe in Beyond Meat, because if I didn't believe in Beyond Meat, I would have already sold it. But simply for the fact that I believe TTCF is going to severely outperform Beyond Meat. And I actually think TTCF has less risk than Beyond Meat. And so when I look at it from that perspective, I do think, if I was to sell something in this portfolio, which there's a lot of stocks we're going to look at, that might be the one, simply like I said, because I feel like there might be a better place for the money. And that's where you get into some really tough decisions in the stock market. When you're looking at something, you're like, I like that stock, but there's another stock I actually like a lot more, okay? And so, yeah, if I was to cash something in this portfolio, it might be Beyond Meat, and I might put that money in TTCF over time. We'll see what happens with that, but yeah, that's kind of how I feel about that one. But Beyond Meat, obviously, they are a growth story. They're obviously plant-based meat company, and so far we're doing decent on the position. We're up $2,100, so if I cash out of that, we'd take a nice profit there with Beyond Meat, okay? Next up here is Corsair Gaming, CRSR. This one we're down on. We're down $6,600 on, down 4% on this one. This is one I could potentially buy a little bit more. I could put a little more money in this one, 4,650 shares we own of Corsair Gaming right now. And this is a company that I think is just really misunderstood by Wall Street. It's a company that's went public less than a year ago. So they haven't even been public a year yet, okay? In the gaming space, in the streaming space. Huge in gaming. Like if you're at all into gaming, like you've heard of Corsair, Corsair, okay? If you're at all into streaming, you've probably heard of Elgato, right? And so they have a very bright future, very low forward P for the type of growth this company has moving forward. I mean, we're talking about a forward P in the 20 range for a company that likely has a substantial amount of growth going for the next 5-10 years. Like I doubt gaming is going to start shrinking, and I doubt streaming is going to start shrinking. Like these are multi-decade opportunities, and so a company like Corsair is perfectly positioned here. $35.77 cost basis. I could potentially buy more Corsair Gaming. I do think that's a stock that could potentially be $100 plus long term, okay? I think they could be an absolute giant. Not just, they already kind of are a giant, but I feel like they're going to be a lot bigger giant if you look out 5 years from now, 7 years from now than they are today, okay? Corsair Gaming. Next up here is Cruisy Doozy, Cirrus Logic. So this might be the smallest position we have in this portfolio. We're up 145%. We're up over $10,000. I took a lot of profits in Cruisy Doozy over the last year or two. And so that's why it's not a very big position for us anymore. But we've made some really good gains on the stock. They have they have chips in many different smartphones and other devices, but where they get the majority of their business is from iPhones. And if you pull up any of the latest iPhones and you look at the teardowns and the audio chips in those, guess what? You're going to find a lot of Cirrus Logic chips. And that goes for a lot of the Apple devices. A lot of them run their audio through Cirrus Logic different chipsets. So yeah, I mean, they're phenomenal as far as that goes. The scary thing about Cruise and why it always kind of trades at a bit of a discount, I feel like, compared to where you would think it would trade at, is mainly because when it comes to Cruisy Doozy, they get over 80% of their business from Apple. And so folks look at that and they say, well, there's risk there. There's a lot of risk. What if their relationship with Apple sours and they break up? Absolutely, man. Fair play. Fair play. I mean, that would be devastating to Cirrus Logic. However, they have a very close relationship. They work on very customized solutions with them. It's not like you could just put, some other place, somebody in Cruise's place to replace them. You could. It'd be a pain in the butt, from my understanding, on all the technicals there. So, anyways, Cirrus Logic. If I fell a bunch, I would maybe pick up some more shares of that one. But yeah, it's kind of in no man's land, and that's why it's just a smaller position in the portfolio. Next up here is Dropbox. So Dropbox is off to a good start in this portfolio. We're up $34,784 on this one so far. We're up 35% on this stock. 5,000 shares we hold, 1943 cost basis. This was a stock when I first started getting into it. And there was a lot of pushback. There was a lot of folks like, I don't know about Dropbox. I don't know. And this was one I was adding in late 2020 and adding pretty aggressively in late 2020. And yeah, a lot of folks were just, they didn't see it with that one. But I looked at this company and I think the run for the stock is just starting. Actually, I think there's a lot more to be had when it comes to Dropbox. But when it comes to Dropbox, okay, they're at the intersection of cloud and e-signing of documents, all right, plus smart workspaces. And then on top of that, when I also think about Dropbox, I think about a company that has basically no customer concentration, which is amazing, and a recurring revenue business model with profitability that is going to start ramping substantially over coming years. So with a phenomenal balance sheet. So when I think about all those different factors, guys, needless to say, it's a stock I'm very excited about. Low forward P, like in the 20 range probably, which is silly for a company like Dropbox. Drew Houston more focused than ever on big vision stuff, which I really like. So ultimately, I really like Dropbox a lot. It's off to a really good start for us, up almost 35,000. I think when it's all said and done, that could be a stock that makes us, I don't know, $70,000, $100,000, maybe even more than that over time. So yeah, definitely like Dropbox. And it's just one, like at the end of the day, man, you gotta believe in yourself over other people's opinions in the end. And that goes for a lot of these stocks, honestly. Most of these stocks, I've always had pushback on them. Even Tesla back in the day, man. I remember how many people told me I was an idiot for buying Tesla. And, you'll see the gains on Tesla. It's ridiculous. It's every single stock I ever get in, there's always a lot of people that don't agree with it. And that's okay. And there's some people that even wish it to go down, and it is what it is. But at the end of the day, you got to believe in yourself over everybody else. That's the secret in life. Just always remember that. Okay. Next one up here, Elf on a Shelf. All right. This one is a cosmetics play, beauty company. We're up 311% on it, up over $22,000 on 1,000 shares here when it comes to Elf Beauty. And yeah, I mean, Elf, a random company, obviously, cosmetics, beauty related. But when I bought this stock and I took a lot of profits on it, I probably should have kept all my shares. But I did funnel that money into some other great stocks as well. So, but yeah, I took a lot of profits and I still hold, roughly $30,000 in the stock. The way I've always looked at Elf is it was extremely undervalued, and it was a great turnaround play, and I saw what was happening with the business. I saw a turn happening in the business, a new focus happening in the business, and yeah, cost base is $7.28, ridiculous, okay? Definitely very thankful for that. Yeah, it was definitely one that was just a beaten down dog stock. I think a lot of people were confused when I started buying that one a few years ago. and like cosmetics company, beauty company, that seems out of Jeremy's normal stocks. Hey, I look for deals all over the place. And at the end of the day, you know, when it comes to a stock like this, cosmetics and beauty, guess what? They're sold in all the big retail stores. I can do channel checks on that. I can see how the product's moving. I can watch YouTube videos on people's opinions on these products. I can see, so-and-so, the big YouTuber with 10 million subscribers just did a video about Elf's new line, and what's the reception of that? Let's go through the comments. Let's go through thumbs up, thumbs down. And I can see all that, right? Real time. And so, yeah, and needless to say, it's been a phenomenal stock for us. And yeah, I should have bought even more when I started buying that stock. It's done tremendous for us overall. Elf Beauty. Next up here is the FB. FB up almost 100%, almost a triple-digit gainer for us now. $55,883. This one is just starting, in my opinion. I think this is going to be a $500 to $700 stock within the next few years easily. Maybe push above that. Ads are getting more expensive on the platform. Obviously, they always are having more users use their platforms. But the real story moving forward for this company, in my personal opinion, is actually around e-commerce, is actually around payments, is actually around VR and AR. That's where the real story is with the FB longer term. The cash cow businesses are the cash cow businesses, but it's really about e-com long term. VR, AR, and payments, okay? And that's where things are going to really start to shake up, and this company is going to command much higher valuations. It's still by far and away the most undervalued of the big tech stocks by a mile. And we're doing well on it so far. $153.35 cost basis on this one. I have absolutely 0% interest in selling FB anytime soon, okay? Anytime soon, no way. That's just one I'm holding and loving, okay? For the long term. If anything, if you told me I had to buy another $112,000 or sell this $112,000, I'm buying another $112,000 worth of the FB before I sell it, okay? So yeah, that's the FB there. Next up here, GGTTF, so GTech Holdings, okay? Let's talk about this one for a moment. So this is one, I bought at different prices. I bought some of these shares in the 30-cent range. I'm talking about in other accounts, and I bought as expensive as 67 cents. I probably need to build this out to a little bigger position. I can't build it out to a huge position. I have 44,444 shares in the stock right now. Current value on this one is 26,000. I got to buy some more GTech, I'll be honest. But like I said, I can't buy a ton of shares because it is a more speculative position. I could see myself maybe buying another 11,111 shares and maybe getting up to 55,555 shares. Maybe I'll even do that today. We'll see. And just building that up a little bit, but I can't make it into a massive position. It obviously has risks, right? It's a very small cap company. It's the smallest cap company I hold, a little over $100 million market cap, right? But at the same time, I look at this company, what is it, $19 million in cash, no debt now on the balance sheet, a business that's booming, triple-digit growth, revenue, brands that are building very nicely, a CEO who's really focused around growth for this company. I mean, when I look at all those things, I got to build it a little bigger, and I got to get this cost basis down a bit. I think I can get this cost basis down to 62, 63 cents, 64 cents, something like that, from 67 cents where it's at right now. That's one of those that just holding long term, throwing it in the filing cabinet. And I don't know. Maybe I'll even bring it up to 77,777 shares. We'll see what happens with that one. But I got to add some more. GTech, I really, really like that one. Next up here is the Planet. So the Planet, we're up 57,000 on this one so far, up 456%. I think when it's all said and done, the Planet will be 1,000% plus gainer for us overall, and maybe even a lot more than that. We'll see what happens with it. We're up 456% right now on our 10,000 shares in this particular account. In my main private account, just for reference, I own probably 30,000, 40,000 shares in that one, and I own a bunch of shares in other accounts. So we're probably well over 50,000 shares in total for the Planet if you add it up all across all my different portfolios. And once again, this is my second biggest portfolio. $1.25 cost basis in this one. I mean, geez, that's hard to beat. That's hard to beat. But the crazy thing about the Planet is, $6, $7, I'm still interested in buying the stock. It's too big of an opportunity. Like I said, I think when it's all said and done, this will be, 1,000% plus gainer for us. So when I think about it from that context, it's still a pretty dang good deal in my opinion, if it goes to where I think it's going long term. So, but yeah, we're doing tremendous on it. The management team does nothing but executes on the highest level possible. They do nothing but amaze me constantly. I am an extremely happy shareholder, not just because the shares are doing phenomenal, but honestly because the management team there is just unbelievable. Like, you look at the numbers, like every time I think, maybe my numbers are a little high, and then management team beats it. It's unbelievable. They're an unbelievable company. And they got the Disneyland of Jack Jackson. They'll continue to build that out over time. So loving the planet. If you told me I had to buy another 10,000 shares or sell this 10,000 in this account, I'm buying another 10,000, just like that. Next up here is Revolve, so RVLV. When it comes to Revolve, we're up $93,000 on this one so far, up 330%. $121,000 current value on this one, cost base $11.86. So when it comes to Revolve, e-commerce company in the clothing space, okay? And management team's done an amazing job growing this business over time. Now, Revolve, I really like it. I'm still not interested in selling it. The gains have been tremendous for us in Revolve, but I'm not interested in selling this stock. I think there's too much long-term potential there to sell out of this stock. I think that the business model could have, to be completely honest, tremendous profitability long-term. I think it could be an extremely profitable business model, like one of the more profitable business models we've seen in e-commerce, actually. And I'm talking about in any category. And so when I look at it from that perspective, I'm not interested in selling the stock. And by the way, you're going to see we got a lot of huge gainers. And I think one of the things that differentiates the good investors from the great investors are ones that can have solid, huge hit after huge hit in the market, right? You can't just be a one-trick pony and have one successful stock. You got to have, multiple stocks that are up 100% plus. In my personal opinion, I think that's really what takes you to the next level as an investor. And then also have very little of those stocks that are down 50% plus. I think that's really big as well. And Revolve's, it's just been fortunate. We've had a grand slam there with that one. Okay. Next stock up here is Skyworks Solutions, another, huge one for us here when it comes to Skyworks Solutions, up 161%, up $79,000 for us, 650 shares. This stock I got in a few years ago. It's my 5G play. It's my main 5G play. I also am invested in Qualcomm, but this is in my dividend-only account, but this is my favorite. Let me be very clear. This is my favorite 5G company. I mean, you looked at the teardown on the latest iPhone, they had like 8 chips in it. And this was something I was predicting years ago that was going to happen in 5G, that their business was going to take off, their revenues and their profitability was going to explode. And now it is starting to play out for this business model. The numbers they're going to be reporting over time should be absolutely amazing. The management team there is stellar. The balance sheet is unbelievable, and they just actually announced a buyout here recently. That'll hurt the balance sheet a little bit in the short term, but from my understanding, it's a very profitable business they're actually acquiring, so that should likely help out EPS in a major way and revenues in a major way. So overall, I am so happy with this company. They just continue to execute on the highest level possible. We have $128,000 in it, 75-70 cost basis. I'm not interested at all in selling Skyworks Solutions. Somebody asked me the other day, like, it's getting close to 200. You interested in selling? No. No, absolutely not. Like, it's a great dividend stock. Dividends will likely get upped over the future years as well, in my opinion. Why? Because they're going to have the profitability to up that dividend more and more, and maybe even do share buybacks over time. So ultimately, I look at Skyworks Solutions as a long-term investment. I'm not interested in selling it at all today. Maybe if it was $300 or $400, maybe it's a little different. But even at $300, I don't think I can sell. Maybe $400, it's like I at least maybe consider it or something like that. But yeah, I absolutely love the Skyworks Solutions. Okay. By the way, I think they're reporting earnings this week. Next up here, Tesla Maesla. So the biggest gainer of the entire portfolio, okay? I mean, you're not going to see many that have, this type of gain when you hold in a stock. Okay, this one's just been tremendous, up 1,469%, up $500,000 on the stock. I repeat, up $500,000 on the stock. Very fortunate. 750 shares, 45.51 cost basis. I'm very fortunate. I followed this company for a lot of years, never bought it, and I got in at the right time. I looked at this company and I was like, man, the stock hasn't moved in years and years. I was looking at the market capitalization. I was looking at Model 3 ramping when I was looking into this company, and I got in at the right time. That's all I can say about it. I got in at the right time, and it definitely was a life-changing stock. There's no doubt about that. I can't say it wasn't. Because all these other stocks are really, really good. But, between the shares I had in this account and obviously the shares in other accounts, it was a life-changing stock. It really was. And it was a stock that definitely helped put me on the map because, when I got in that stock, there was a lot of negativity around it, a lot of short seller attacks at that time. A lot of, people saying things like, oh, Elon Musk is a fraud and Elon Musk is, running a scam company or whatever. And just ridiculous stuff. Just, when you look back, it was just ridiculous. But there was a lot of people saying stuff like that. Elon Musk is running a Ponzi scheme. It's just like the craziest things people could say they would say about this company. And I would always come out and defend it. And I'd make Tesla videos almost on a daily basis back in the day. It's kind of funny nowadays. I almost never make Tesla videos, and yet the stock's amazing. It's like maybe one a month now I'll actually dedicate toward Tesla. But it was definitely a life-changing stock for me. The gains were immense. Obviously, $500,000 in gains in this account. And like I said, for my brand, it was a really big stock because it went so insane and because it was a very, very divisive stock in the market. And, it was at a time when there weren't that many people, that were really around this stock back then. Let me just be very clear. It was funny. I was looking at how many channels were doing live streams on Tesla yesterday, and I was like, man, that's a lot. And those folks weren't around or weren't really talking about the stock very much, especially in a positive light back in 2018, 2019. Nowadays, it's popular and it's cool, and you want to be the cool guy, talk about Tesla and defend Tesla. But man, back in the day, it wasn't like that. It wasn't like that at all. And I remember I would come out with some very ambitious videos, and they would just get tons of thumbs down, man, just tons. One of my highest thumb down videos ever was a video where I was predicting Tesla was going to go over to $3,000 over time, and it ended up way eclipsing $3,000 a share because this was pre-split. On a split basis, Tesla's probably $3,500 or something like that now. And, it was a different time, and it was a life-changing stock for me nonetheless. And am I interested in selling these shares, these 750 shares? No, I'm not even interested in taking any profits. Just in the filing cabinet, and we'll see where things shake out over time there, okay? So that's Tesla Tesla. And yeah, definitely thank you, Tesla. Okay. Next up here is TTCF. This is the next game changer for me, in my personal opinion. I think this will be one of those 10x potential stocks long term. I don't know if it will happen as fast as Tesla happened, but because it's a food company, it takes a little longer to build those out sometimes. But I think this one has unbelievable upside opportunity in front of it over the coming years. We own 8,100 shares here. All total, I own well over 50,000 shares of TTCF if you added up all the shares in different accounts and some call options. And I think this will be another game-changing stock for us overall. In this particular portfolio, like I said, we own 8,100 shares, 1885 cost basis. Not interested in selling at any price. It doesn't matter. It could be $80 a share tomorrow. I'm not selling the stock. 80, and I'm not selling. Okay, it could be at 100 tomorrow. I'm not selling the stock. I'm just not. No. Okay, there's so much upside opportunity, in my opinion, in this stock over the coming 5-10 years. I think they're going to become a food giant, and I'm not interested in selling a food giant for anything less than $10 billion. Let's just put it that way, because food giants usually trade at well over $10 billion. So. Love that one, and I think that will be the next massive winner for us overall. Next up here is Upwork. Another huge winner for us here, Upwork. So we're up almost 30,000 on that stock, up 270% when it comes to Upwork, freelancing economy company. And, just a massive giant in that space. 825 shares, $41,000 is our current value there. 1343 cost basis. I should have bought heavier. That's the one thing I'll say about this one. I should have bought heavier. I believed in this one a lot. And yeah, I should have bought heavier. That's all I'll say about it. I should have bought heavier. Am I interested in selling? No, I'm not interested in selling. Next up here is Walgreens Boots Alliance. And that one, we're up $3,800, up about 9% there, 900 shares. My big position I have is in my main private account. In that account, I have 20,000 Walgreens shares in my main private account, okay, just for reference. So, but yeah, I'm not interested in selling that one. Great dividend stock, great turnaround play. Account in total's up $875,000. This does not account for any profits taken in this account. This also doesn't account for any dividends received from these stocks, which several of these stocks pay me out some very nice dividends, which I'm fortunate for, and up 119% on current possession. So yeah, the account's doing very, very well. I'm very, very pleased with that account in total, and I'm pleased with the amount of highly successful stocks we have. That's really how I grade myself. How many stocks do I hold that are down, 20%, 30%, which fortunate enough, none. And then how many stocks do I hold that are up, roughly 100% or more. That's how I really grade myself then. So hope you guys enjoyed this. As always, if you're looking to join us in Stock Hub, check out the pinned comment down there. If you want to join my private stock group, learn directly from me through all the course curriculum. If you want access to our private Discord chat, that's going to be the second pinned comment down there. Thanks so much for joining me today, guys. And have a great day. Peace. Much love. Don't forget to smash. I appreciate you.